If you look at what's happening in London, they are being bled dry, and in platinum and in silver. Gold will be next. They're being bled dry to the point where it is an existential threat to some of the European banks. Now, one of the things that I've thought of that I have a hard time shaking it, if I'm a big bank in the United States and I want to short the price of metal and drive the price down, there's one place I do it on: COMEX, period. Nowhere else sets the price. So anyone shrewd enough, like the Chinese, well, they would do the same thing. They would short it on COMEX and then buy it up all around the world at subsidized prices. But those banks, in order to protect themselves, what they do is they short it in the United States, and then they buy the opposite side in London, which allows them to take physical delivery if they want. They're hedging it, in other words, in theory. I believe very strongly that the United States banks understand what's happening, and they're bringing all their metal back, which will ultimately end up in the possession of the Treasury Department, if I had to guess. But if he's right, the U.S. banks are covering their short positions quietly right now, and maybe are already mostly covered.
Yeah, I was going to say, I don't know how quietly Bank of America's been. They've been just downright screaming loud for anybody paying attention.
Right. And now the European banks are on the hook. And if things blow up in London, the systemic chain reaction could bring down some of the biggest banks across the globe, while the U.S. banks are comfortably sitting away from all of that carnage. I guess we'll see. But honest to God, Mark, I mean, something is very, very, very different. What type of volume has to move for silver price to drop 50 cents or $1? That's just strict paper trading. That's all paper trading on COMEX. It's dumping of futures contracts that drive the price down. But what's different about that question is that in years past, if they would dump that much supply onto the market, like a drive-by shooting, and they do it at the most inopportune times, like usually in what's called the access market, where the market is transitioning from the London close, the PM fix, to the New York open. It's the market is in essence not really open, but it is, and you'll have people come in and drop, $100 million worth on the market like that. Now, any trader who did that would be fired and shot, and maybe not in that order, because you are doing things to maximize the ineffective trade. In other words, you would do it slowly over time. You wouldn't dump it all when the market is most thinly traded. You're doing it for effect. But what's happening now is that anytime they hit it, like what I've been noticing lately is that, and it seems like short covering, where they're knocking it down overnight. And as it gets into New York now, it's going up. So in other words, they knock it down overnight, and the minute it gets to New York, it goes up. They are covering those short positions. These are the U.S. banks, if I had to guess. They're suppressing the price at night, buying it as it comes into New York to cover their short positions, their old stale short positions, and pushing the price up. The lack of any continued falling is something that's incredibly unusual, where normally they step on it and they step on it for weeks at a time. Now it seems as though they step on it and it comes right back up. Today was a good example. Right now, at least last I looked, right now it's flat, but it was down to 43.78 earlier this morning. Now it's 44.20. So this is what we've been seeing happening every day, and I just think that it's going to continue to move higher slowly. Once it starts to rocket, you'll know that the big money has already really positioned themselves nicely to stable coins. So instead of using things like wire or check, which will become obsolete maybe before the year's over, they will use stable coins. And this is the whole thesis of what I've been saying to you for a long time now. And I started talking about this before everyone was talking about it, maybe 3, 4, 5 months ago with the stable coins, because this is how it works. So all of the banks will start issuing stablecoins, all of them. You'll see American Express and all of the credit card companies and all the corporations.
You'll see the biggest big box stores like Walmart, Amazon.
Well, I'm going to use Tether as an example because this supports exactly what I've been saying they're trying to do. So Tether, USDT, everything that they issue stablecoin wise is backed primarily by US treasuries. Those treasuries, those short-term treasuries yielding right around 4% or just under, they keep the interest. So when they issue you a stable coin so that you can trade throughout the ecosystem in the crypto sphere, the interest that is kept by Tether is used to buy more treasuries. But guess who was just at the huge gold conference in Beaver Creek, Colorado? Tether. How do you like that? Tether, who has also a massive position in gold, is now talking directly to the mining companies. They are going to start buying gold mining. They also buy Bitcoin. So I'm not a bobo or an advocate for Bitcoin, but I do believe it is part of the government's plan to pay off the debt. So here's the bottom line. They're going to push everyone into stablecoins. And it is not, I mean, it's cool how fast things move with the stablecoin. It'll be like Zelle or Venmo. And it may make life easier. It may also make it more compromised in terms of quantum computing and hacking. Who knows? But that's a topic for another day. But if you look at it for what it is, this is a new monetary system. Right here, right now, they have created a system where demand for U.S. treasuries is no longer organic. We don't want it because we revere the country. The country is in a surplus and the largest manufacturing country on the planet. It's anything but that. We have no manufacturing. We have massive deficits. In fact, we're insolvent. We are no longer revered. We go around the country around the world sanctioning and imposing tariffs upon our allies. We fight wars. We shouldn't be involved in all of this stuff, not to mention the brain dead stupidity that we lived through for the previous 4 years, the previous administration. The country is no longer looked upon as it once was. Therefore, the first casualty of that is our treasuries. And so by issuing stablecoins that are backed by treasuries and gold and Bitcoin, you have just done exactly what I told you they're going to do. And what are they going to do? They're going to revalue gold. Why do they revalue gold? Not because they want their asset to go to the moon, but sure, that helps. It devalues the dollar. Rising gold price devalues the dollar. What about rising Bitcoin? Same exact stupid thing. As those two things go much higher, the dollar goes lower. And in relation to that, it is a way to devalue the dollar and not only make paying off the debt easier, but now if I'm right and they peg the back end of the treasury market, the 10, the 20, the 30, and ultimately a 50-year treasury, with only interest maybe 1% paid on the 50-year treasury and maybe a tiny bit on the 30, but redeemable in gold, with a massively devalued dollar and a much higher gold price to peg it because of redeemability, you can bring back your manufacturing at no borrowing costs, zero coupon up front on the issuance of those treasuries. With a devalued dollar, those manufacturing facilities will be able to sell to the globe. In essence, you're getting rid of the world reserve status. And so when they are fast tracking, think about this, Mark. You know, you're someone who's been on the cusp and having dinner with your two sons. I know you understand crypto better than just about any of the people watching this show and me. But think about how fast stablecoins have blended into the fabric. Like a couple years ago, you know, no one talked about stablecoins. They were a fringe thing, right? And now all of a sudden it is actually backing the US Treasury. And the key to it is that all of the interest that is gathered by the companies like Bank of America or Tether or Circle, which is USDC, I believe, or any of these other stablecoin issuing entities, the interest that they make will go to buy more treasuries, will go to buy more gold, and will go to buy more Bitcoin, which does exactly what they want. Lowers interest rates, devalues the dollar, makes it easier to pay off the debt, backs the Treasury. It is diabolically genius. It should be called the Diabolical Genius Act. And I think you'll see a transition away from all forms of this may be the last time any of you ever order check blanks from your bank, because there is no need for paper checks anymore with stable coins, because it's just bang, boom, done. Like when you go to buy a car, and now they don't want your check because of, it could be counterfeit or whatever. They're not gonna let you write them a check for $50,000 and drive off the lot. But you can say, I just stable coined you, and it's now in your account, done, boom, instant settlement. But every time you would do that, you're giving another $50,000 in energy to buy more treasuries and more assets that support the agenda. And it's filling the void for the lack of organic demand that the globe used to have for our treasuries. Now they have disdain for them. So it's an interesting, if you don't have gold and silver, you won't survive. That's not what I'm saying. What I'm saying is that if you save in dollars, you're going to go broke from a standpoint of...
It's designed for you to go broke if you save in dollars.
Yes. And I mean, you can look at it simply in its relative purchasing power. This year, it's down over 11%. And so I would simply say you have a far better chance of maintaining your standard of living or even increasing it by owning assets. Assets feed you, liabilities eat you, and the dollar is ultimately a liability of the U.S. government or of the Federal Reserve, and it's a liability that is decreasing in terms of its value.